A 9.6% annuity return? Is it possible? Is it possible? So I'm starting to do some advertising on the blog side of heritagewealthplanning.com, just running some ads on there. And it pays a little bit of money. It's good. And there's a couple of ads that I drew my attention. One's from TIAA CREF about their income annuities, which I'll talk about in a different video. And this one right here is from Annuity Alliance. So we're going to dive into this. I think it'll be interesting. And look, I haven't done any research on this at all. So we're going to check it out. So follow me as we go to this. So I've seen this Annuity Alliance, not just on my website, but all over the place. And I just find it funny. 9.6 annuity return. Compare the highest annuity rates for 2019. So let's see what they're talking about. So we're going to hit learn more. By all means, you should do the same, because if you click on it, I get paid. So let's see what happens. All right. So looking for market-like growth without market-like volatility. Yes, I am. Here's what 2019's best annuities have to offer you right now. 9% annual returns, 40% guaranteed more income for life. A++ insurance companies, purchase bonus up to 13%. Whoa, no stock market volatility. Fill out this form to get your report. So I'm going to go ahead and fill out this form. And we're going to see what we come up with there, but I'm not going to do it right there. I'm going to do it here. And so I basically put my name. It says select annuity amount. We'll put 100 to 250,000 in it. We'll select my age. We'll say let's say I'm 60 years old. We're going to say my email. All right. Okay. We'll say my number is, and I'm going to make up a phone number there. We're going to put my zip code, which is my zip code, and we're going to hit there, and we're going to say get annuity report. Look at what your buddy, I thought I did that. Select annuity amount, 1 to 200. Dude, okay, there we go. So let's see what we got here. Thank you for request. We'll be contacting you to follow up shortly for a customized. Okay. All right, so I did thank you for your, so I did that. They say thank you for your request. We will be contacting you shortly to follow up on your request for a customized annuity report. We only need 2 minutes of your time to confirm your information and ask a couple more questions to help narrow down the number of annuities we're going to look for you. We promise no confidential, sensitive questions will be asked for you. A local annuity expert and a member of our national network of top trusted advisors will get to work putting out. Okay, yeah, that ticks me off. All right, so scratch that. That didn't do anything. That's annoying to me. I see. I hate that crap, man. I don't want to be. LendingTree.com did the same thing. Let me just see if I got the email from these guys. Look, if they want to pay me to advertise on here, more power to them. I mean, because I can't talk on all. I mean, I can't stop you from doing what you want to do. Yeah, they haven't sent me an email. That's just that's some weak ass stuff right there. I'm sorry. That stuff like that bothers me. Look, you got a free report, but you don't get. I got to talk to somebody to get the free report. I hate that stuff. So just last week, 11,426 people received a customized annuity report from us. Hold on just a second. I want to see if they're emailing me. We are helping more and more Americans make. No, see, they didn't bother to email me, man. All right, bear me. I want to see. Nope. And that stuff drives me crazy. It says must be accurate to receive report. Your zip code and phone number. Does it say anything about they're going to get a call? No, it's up to date, accurate, free, and no obligation. And it says it must be accurate. Your phone number, email, and zip code to get the report. All right. So look here. You're not getting 9% annual returns with no stock market volatility. I'm sorry. If these guys don't want to advertise, that's fine. That's it's just not. You're not getting that kind of return with no stock market volatility. And see, this is what annoys me is that annual returns. The insinuation is that the annual returns are on your walk away money. It might be a distribution yield, which is what an income annuity does, which is a combination of your return of principal plus interest. That's not an annual return. That's a completely different issue than annual returns. It just 9%. I just it freaking annoys me. Let's see what else. Index annuities are a type of fixed annuities that offer the best of both worlds: investment safety and the opportunity for high growth for your long-term investment objectives. They also give you competitive interest rates linked to a benchmark index, tax-deferred growth opportunities until payout, guaranteed life and benefit, blah, blah, blah. Your free report will include up-to-date illustrations, rates, fees, and education material for the best news 2019. Reports are customized in your state, age, and purchase amount. Since these reports take several hours to produce, we ask that you provide us with correct. Okay, it's more than annuities to your retirement. All right, so look, I'm not going to do it because I just don't care. I just try. What they're saying is 9%. See, we couldn't say this in the investment industry. Oh, we could not insinuate 9% returns. We couldn't. 9% plus annual returns. Now, what I guarantee they're going to say, if this happens, that could happen, which would lead you to a 9%. And if that happens, would be, hell, probably a 20% stock market return, and you'll get 9% of that. But you can't. They're insinuating that. I hate this stuff, man. It's just that drives me crazy. All right. So let's see if we can't find another one. So we're going to stop. We're going to go back to my website, and we'll see who else is advertising. So hang tight for me just a second. Here's one for this one I was looking for. TIA retirement income, calculate monthly paycheck. TIA, they're going to do a SPIA, an income annuity. So I'm curious to see what that shows up. So I do like this one right here. Let's see. I want to see what this looks like. So never run out, guaranteed monthly income for life. Okay, be more financially confident today. Guaranteed growth while you save, guaranteed income when you retire, more income with profit sharing. TIA's sharing the profits approach seeks to reward our clients with additional growth in income as profits are returned to clients. Okay. See your estimate for monthly income that never runs out. Sharing the profits. So we'll click on that button in just a second. When TIA does well, our participants do well. Through our sharing the profits approach over the past 3 years, the TIA traditional annuity has shared $10 billion in profits with 2 million participants. The sooner you start, the bigger the income. Here are 2 hypothetical scenarios on show how investing early can add growth to shared profits. So here's old Troy. He put in $10,000. Initial contribution. He invested for 10 years. Guaranteed future value is $13,000, but the actual return is $15,000, and he got $2,000 of shared profits. Here's Andrea, 10, 20. Okay, she got 11,000 shared profits because that doesn't make sense. The sooner you start, the bigger the income. That doesn't make sense because Andrea was 56 when she started, 21 years older than Troy. And she's got a whole lot more income than Troy does. So that doesn't make any sense. And she got 11,000 shared profits where Troy only got 2. What's up with that? All right. I don't get that at all. All right. So that's weird. Okay. That doesn't make any sense. All right. Make guaranteed income part of your retirement plan today. Okay. All right. Gotcha. All right. So let's keep looking. I have looked at this already. See if you're eligible. You got to be, let's take a look. Part of a sponsor like a university or something like that that has TIA as part of the retirement plans. Yeah, right here. People who currently work for organizations and nonprofit industries with employer-sponsored retirement plan that includes TIA traditional as an option are eligible. TIA traditional and a TIA IRA. Wherever you are in life, a TIA IRA may be a smart way to manage your retirement goals. If TIA traditional is not offered through your retirement plan, considered a TIA IRA that offers access to it. Okay. Oh, so still either way. So let's look for, we'll scratch the profit sharing and we'll go, how do I get back out of here? So let's hit that. Because if you're not part of oh man, what happened? If you're not part of if you're not part of a group that offers TIA CREF, you're not going to be able to get the profit sharing. But that didn't seem that much. All right, so let's calculate our monthly paycheck. Let's see what we got here. We'll say, let's say I'm 50 years old. And we're going to retire at 62. We'll just say that. Now let's just say 65. And we're going to put in, I don't know, $25,000. And we'll put in $250 a month. So let's see. Okay, Krakow. So when I'm 65 years old, I'll be getting $7,000 a year. That was my trusty calculator. Hold on. All right, so I'll be getting $7,000 a year. So how much I put in? $25,000, and I'm getting I did it for 15 years times 12 times 250. So I put in 60,000 total when all 70,000 total when all said and done. So I'm getting a 10% payout rate, which is pretty doggone good. Not gonna lie to you. So I put in a total amount of $70,000 at all said and done, and I'm getting $7,000 annually out of that investment. Now that doesn't. I mean that's just my capital. What am I getting based on my capital? Now it's not what am I getting based on my returns, because I presumably got some returns on that. It doesn't say, but I mean, let's just say 3%. So we'll just say I got, we'll say 3.5%. So I did 25,000. So my present value, we're doing for 15 years. We're gonna get $250 a month. We're putting in as our payment. We'll just say we get 3.5% a year. Our future value, oops. Oh, I gotta change this 1 sec. Okay. And we get 3.5%. 25,000 is our present value. Let me pause this. I'll tell you. It should grow to about $101,000. So that's 3.5%. So that's pretty good still. I mean, that's $7,000 on 101,000 divided by 101. Yeah, that's a 6.9% payout. That's pretty doggone good for sure. So that seems like a good deal. I would have no qualm with that at all. I like that because you know for a fact that your estimated monthly income, not guaranteed, estimated payments are based on hypothetical assumptions. Results may vary. Yeah, so we don't know exactly what it's going to be, but I'm pretty comfortable with that. That seems pretty. I mean, assuming they're using a 3.5%, I don't know. I wish they would tell us. Annuitization of your assets is a permanent decision and cannot be reversed. So I'm pretty comfortable with that. I wish I could understand how they're estimating that. But I'm using a 3.5% rate, which I can't imagine TIA is using much more than that. That'd be insane. All right, so now the question always comes, I can see, is wait a second, I'm getting $5,000 or $7,000 a year from, or we'll just say $587 a month from TIA Craft. I only put in $70,000, and I'm only getting $1,800 from Social Security, and I've been paying for 35 years because the Social Security is based on today's numbers. This is based on 15 years from now. So if we get $1,800 a month from Social Security and we inflate it by 2.6%, and we inflate that we got for 15 years, that will be paying you, why is it up here? Hold on just a second. Present value, let's change this over. One payment a year, enter, there we go. So we got $1,800, our present value. We're going to do it for 15 years. We're 2.6, our interest rate, no payment. So that will grow to $2,588. I mean, that's the issue here, is that our Social Security that we're getting, the amount we see today, you can't compare it to the future amount you see on anything, be it an annuity, be it an investment account, because the future amount includes the growth. The Social Security you see today is in today's numbers. It does not show the growth. I cannot stress this enough. So I would be inclined to go that route if I had, say $25,000 to dump in there, and I had $250 a month. I'd say, yeah, man. I wish I could know what they're basing this on, but I'm locking down another $587 a month. That's not that bad. If you're getting 3.5% and that's a 7% payout rate, that's pretty doggone good, man. Now I don't know if this is based on a single life or I just don't know, but something to think about. So this is an advertising I like. All right, let's see what else jumps out there. This is just bad advertising right here. Founded by Blackstone alumni and Goldman Sachs alumni and backed by top VCs, including, I don't even know what that means. It says cadre. All right, I guess that's some kind of investment firm, but that doesn't speak to me. That's a weird advertisement. What does that do for me? So we'll hit refresh and see what else is out here. Become a health coach. You already talked about that. Well, who comes up with that ad? Founded by these people. Wow. That doesn't tell me what you do or what you need. Let's see what else. I guess that's pretty much it for this right now. I guess it doesn't turn. Oh, I saw one pot stock to buy now. I bet that's from our good friends at Motley Fool. Let's see. The wealthiest investor. We'll see who this is about, and then we'll stop. The number one pot stock to buy now for immediate release. Send me the report. Okay. Well, that doesn't do much for me. And last time here, we'll hit, did all that one more time. And we will see what happens. Okay. All right. Well, that's pretty much it for this time being. You can tell. Look, these guys advertise. That's fine. I don't care. I am going to click the Blackstone. Who are these people? That's a horrible advertisement. Institutional grade real estate investments available to you. Well, why would they put that in their ad? Become an investor. There's $7 trillion of U.S. commercial real estate, but where to start? Well, this is now interesting to me. All right, we bring real estate. Okay. Well, that's what I don't get. What? Okay. Anyway, that'd be something to look at, man. That's interesting. So, what do you have to do to get involved in Ford Foundation? Oh, good night. Ugh. SL Green Realty Group. We got Colsa, whatever that. Well, that's interesting. Let's click on Become an Investor and see what this does for us. Oh, you got to put that information there. All right, you have to be an accredited investor. Joint income greater than 300 or annual income greater than 200. Net worth greater than $1 million, excluding your home. All right. That's interesting. So that might be something for you all to look into. I don't know anything about it, but I like the idea of diversification. I just don't know anything about it. And just because they come from Goldman Sachs and Blackstone, that I could care less. But something to think about. All right, so that's it. That's the advertisers on here. We'll see you next time. Don't forget to smash. Thanks, guys.